What if you could invest in a digital revolution that's reshaping money itself? Cryptocurrency investing offers a wild ride to wealth, but it's not for the faint-hearted. Curious if it's your ticket to the future? Let's unpack crypto for beginners. What is cryptocurrency investing? Cryptocurrency investing means buying digital assets like Bitcoin or Ethereum, hoping their value rises or generates income. Unlike stocks, crypto operates on decentralized blockchain technology. Think of it as a digital ledger no bank controls. Take Aisha, a 28-year-old teacher with $1,000 to invest. She's drawn to crypto's potential after Bitcoin surged 300% from 2020 to 2021, per CoinMarketCap. She's not chasing hype, but wants to diversify beyond traditional assets. Crypto's market cap hit $2 trillion in 2023, showing its growing mainstream appeal. It's not just buying coins. You can stake some cryptos for rewards, like dividends, or trade for short-term gains. Aisha starts with Bitcoin, the gold standard, using Coinbase. Emotionally, it's thrilling yet nerve-wracking. Prices swing 10% daily. Risk is high. A 2022 crypto crash wiped 60% off market value. Aisha learns basics: wallets, exchanges, keys, via free courses on Coursera. Practically, she opens an account, verifies ID, and buys $100 in Bitcoin to test the waters. Key mindset: crypto's speculative, not a sure bet. Aisha treats it as 5% of her portfolio, balancing excitement with caution. Choosing the right cryptocurrencies. Picking cryptos is like scouting startups. Focus on fundamentals, not buzz. Bitcoin and Ethereum dominate, holding 60% of market cap in 2023, per CoinGecko. They're safer bets for beginners due to liquidity and adoption. For example, Liam, a 31-year-old barista, researches Ethereum for its smart contract tech, powering apps like DeFi. He checks white papers on Ethereum.org, confirming real-world use. X posts show developer activity, signaling long-term potential. A 2023 Deloitte report noted 80% of blockchain projects run on Ethereum. Beyond majors, altcoins like Cardano or Solana offer growth but higher risk. Liam avoids meme coins like Dogecoin, which spiked 5,000% in 2021 then crashed, per CoinMarketCap. He uses CoinMarketCap to check market cap, trading volume, and developer activity. High numbers suggest stability. Emotionally, it's tempting to chase hot coins. Liam sticks to two: Bitcoin for store of value, Ethereum for innovation. Practically, he allocates $500, splitting 70/30ths, using Binance Screener to compare metric. Research first, hype last. Understanding blockchain and wallet. Blockchain is crypto's backbone, a secure, transparent ledger recording transactions. It's why crypto's trusted without bank. Wallets store your crypto. Hot, online like Coinbase, for convenience; cold, hardware like Ledger, for security. Sophia, a 34-year-old nurse, buys $300 in Bitcoin. She uses a Coinbase hot wallet for ease but learns private keys, unique codes, control her funds. Losing them means losing her crypto. A 2022 Chainalysis report estimated 20% of Bitcoin is lost to forgotten keys. Cold wallets reduce hacking risk. Sophia buys a $60 Ledger Nano, storing most of her crypto offline. She feels secure, like locking cash in a safe. X posts warn of exchange hacks, pushing her to prioritize cold storage. Practically, Sophia practices sending $10 between wallets to learn. She backs up her seed phrase, wallet recovery code, on paper, stored safely. For beginners, understanding wallets is step 1. Start with a trusted exchange, then explore hardware. Emotionally, it's empowering but requires diligence. Sophia uses wallet guides on Crypto.com, easing her into blockchain's tech without overwhelm. Benefits of crypto investing. Crypto offers explosive growth potential. Bitcoin's 10-year return averaged 200% annually through 2023, per CoinGecko, dwarfing stock. Ethereum's DeFi apps yield 5 to 15% via staking, like digital dividends. Noah, a 29-year-old freelancer, stakes $200 in Ethereum on Kraken, earning 6% yearly. His portfolio grows without trading, feeling like passive income. Crypto's also accessible. $10 starts you on most exchanges. Decentralization is a draw. No government controls Bitcoin. In 2023, 40% of crypto users cited financial freedom, per a Binance survey. Noah values this, especially in inflationary economies. Posts from crypto enthusiasts reinforce this ethos. Diversification is another plus. Crypto's low correlation with stocks, 0.2, per 2022 Morningstar, cushions market dip. Noah's crypto holds steady in 2022's stock crash, boosting confidence. Practically, Noah diversifies with 80% in Bitcoin/Ethereum, 20% in altcoins. He uses apps like Blockfolio to track prices, starting small to learn the rope. Risks of crypto investing. Crypto's volatility is brutal. Bitcoin dropped 50% in 2022, per CoinMarketCap. Losses can hit hard if you overinvest. Elena, a 32-year-old teacher, buys $500 in an altcoin that tanks 70% after a scam rumor. Emotional toll, panic and regret. Regulation is another risk. In 2023, SEC crackdowns on exchanges like Binance spooked markets, causing 10% dip. Posts flagged these risks, but Elena didn't diversify enough. Hacks and scams abound. A 2023 Chainalysis report noted $3 billion in crypto stolen via hack. Elena uses two-factor authentication and cold storage to protect funds. Market manipulation, like pump-and-dump schemes, hits smaller coins. Elena avoids low-volume cryptos, sticking to top 10 by market cap. Practically, she risks only 2% of savings per trade, using stop-loss orders on exchanges to limit losses. Mindset: treat crypto as high-risk, high-reward. Elena learns from losses, focusing on fundamentals to avoid hype trap. Setting up a crypto account. Starting is simple but requires caution. Choose a reputable exchange, Coinbase, Binance, or Kraken. Verify ID, link a bank, and deposit funds. Most require $10 minimum. Mia, a 27-year-old freelancer, opens a Coinbase account with $100. She buys $50 in Bitcoin, $50 in Ethereum, using their beginner-friendly app. A 2023 Statista survey showed 60% of new investors used Coinbase for ease. Security is critical. Enable two-factor authentication, avoid phishing link. Mia checks X for exchange reviews, confirming Coinbase reliability. She starts with a hot wallet but plans for a ledger later. Emotionally, it's exciting but scary. Mia fears scams. She uses Coinbase tutorials to learn trading, feeling empowered. Practically, she practices with $20 trades, testing withdrawals to understand fees, 1 to 2%. Key tip: only invest what you can lose. Mia keeps 90% of savings in safer assets, using crypto as a learning experiment. Building a crypto portfolio. A balanced crypto portfolio mitigates risk while chasing growth. Allocate 5 to 10% of investments to crypto, 80% in Bitcoin/Ethereum, 20% in vetted altcoins. David, a 35-year-old consultant, invests $2,000, $1,600 in Bitcoin/Ethereum, $400 in Solana for its fast blockchain. A 2023 CoinGecko report showed diversified portfolios cut volatility by 15%. Rebalance quarterly. Sell if one coin balloons to 50% of holdings. David uses CoinMarketCap to track prices, selling Solana gains to buy Bitcoin dip. Emotional boost. It feels like active wealth building. Research altcoins via white papers, not hype. David avoids coins with no use case, checking X for developer activity. He stakes Ethereum for 5% yield, adding passive income. Practically, use portfolio trackers like Delta. David's strategy: focus on majors, small altcoin bets, balances risk and reward. Monitoring and managing crypto investment. Crypto moves fast. Monitor weekly, not hourly, to avoid stress. Check prices, news, and blockchain updates via CoinGecko or X. Sophia, now 35, tracks her $1,000 portfolio. When Ethereum dips 20%, she buys more, trusting its fundamentals. A 2023 JP Morgan study showed disciplined investors outperformed panic sellers by 25%. Adjust for market shifts. Regulatory news or hacks can tank prices. Sophia sells an altcoin after a security breach, preserving capital. She sets price alerts on Binance, staying proactive. Security: keep most funds in cold storage. Sophia moves 80% to her ledger, checking X for hack warnings. Emotional calm: routine checks prevent rash moves. Practically, use stop-loss orders to cap losses at 10%. Sophia's discipline: weekly reviews, diversified holdings, keeps her portfolio resilient. Cryptocurrency investing offers huge potential but serious risk. We've covered picking solid coins, understanding blockchain, setting up accounts, and managing volatility. Start small, buy $10 of Bitcoin, learn the basics, and grow from there. Crypto's not a quick win, but with research and discipline, it can be a game changer. Take one step today to join the future. Check the description or pinned comment for free crypto tools and exclusive tips to start your journey. Since you're still here, YouTube's picked the perfect next video for you. It's on screen now, so keep diving into crypto,